Comedians get paid to make people laugh, but in this case, there is no comedian needed. The markets themselves are a laugh. Somebody sneezes and it drops 400 or 500 points. It's truly a joke. The only notable buyer has been, of course, stock buybacks. The continued trend has persisted. Now, while central banks have also been buyers, apparently buybacks largely persisted throughout the supposed blackout period of April. I hope they have an unlimited checkbook to keep this party going. You came here for the truth, so let me unveil that for you. Today I want to talk about what happened in the stock market. We're going to look at what Jeffrey Gundlach said. We're going to talk about the stock buybacks. I want to look at many factors here, and I wanted to begin by taking a look at the markets themselves. Here you can see what has happened. Obviously, if you've been paying attention to the news, you would have seen the markets dropping. The Dow Jones 473 points down. Yesterday was also a bad day. You're looking at this right now, coming after many weeks in a row of positivity. If I show you the past 3 months, you can see it there for yourself. This is coming at a time where we have seen all of the news coming out. It's been nothing but positive. Any negative news had been pushed to the back. Don't worry about it. Don't pay attention to it. Don't look over there. Look over here. Distraction. Well, sometimes you get some real news coming out, and so we have to pay attention. I'm sure you saw the news on Tuesday's trading session, but basically the threat of increasing the tariffs made the stocks fall. This has been a very big concern for the markets. There has always been the trade issues. They've been going on for a year now, as well as the fact that we need to make sure that the Federal Reserve is going to continue to print money and they are going to continue to keep interest rates low. That has been really the name of the game here going on. I'm not going to bore you with any more of those details. It's been really said over and over again in the mainstream media. I don't have anything else to add. And so I wanted to turn over to the new bond king, Jeffrey Gundlach. He said this: "People keep acting like this is some sort of locomotive that's chugging along. But the NYSE, which to me is the most important one because it's the biggest, it peaked in January of 2018 and then couldn't quite make it back to that peak in October. And now it couldn't quite get back to that October level, and now it's rolling over again." I'm going to show you the chart in just a second, but it gives you an idea of, despite all of the stock buybacks, despite all of the money printing, despite everything we have seen, the positivity saying the GDP is so high, the market is fantastic, the economy is fantastic. If you look at it in this way, it's still at that level. Now, the level is very high compared to where it was back in March of 2009. I'm not denying that, but we have to really acknowledge where we are in the cycle at least. It's getting weaker, it's getting riskier, volatility is present, and we can see the tensions are high. Now, is there going to be a trigger event tomorrow that's going to create a collapse of 20, 30, 40, 50%? I don't necessarily see that occurring tomorrow, but at some point we have to have a normal credit cycle really change that has to happen. It does occur when you have these contractions. It's just a matter of time. A bear market is really more about cycles and manias, and then things one by one rolling over and the market getting narrower and narrower. And I think all of this has been happening over about an 18-month time period. I think that we are late in the cycle, and to characterize the last 15 months as a bull market is just wrong. So really, when you look at it, I mean, I could show you, this is basically over the last year. I can't get a good chart for the 18 months. What we're looking at is the markets have not been as strong as we've been told when you look at it over a longer period of time. Throughout that initial contraction from the central banks, the quantitative tightening, it never really recovered after that. Yes, we have seen the markets coming up significantly, but it hasn't really done so beyond the previous highs. And that's really a challenge that it's been facing. I mean, we're looking at it, basically going at that same level. Now, what could take it over? If we see a positive news coming out of the trade issues, it's going to boost it. There's no doubt about that. We will see the stocks continue higher. I've been talking about this for months. We're looking for a good actually positive resolution to what's happening with the trade issues between China and the US. That will definitely be something that will be impacted positively by what we're seeing in the markets. There was also the mention in there of the Federal Reserve. Think about this right now. We have the Federal Reserve not really saying anything anymore. They're just saying we're going to wait and see. We're going to take a cautious approach. Every word that they're using has really been about, don't look at us. We don't know what's going on. We're just going to sit back here and make sure that you guys take care of everything. You got to deal with your debt problems. You got to deal with your deficit. We're just going to leave things the way it is so you can't blame us when things screw up. Well, this is not going to work necessarily, because without more money printing, they need to increase their money printing. Well, then the markets are not going to like it. This right here is out of Axios exclusive. Tech again leads 2019 buybacks toward a record. You can see at the top of the list, $53 billion worth just for information technology. That's 20% of all the announced ones. This is going as of April 24th. We're seeing this. I mean, come on. Throughout 2019 alone, all of these tech companies have been buying back their shares like crazy. Consumer goods, 49 billion, industrials 47 billion, then we go energy, healthcare, and so on. So you're looking at that, the amount of money that's being poured back into these companies here. This has been the number one buyer, and I will show you directly from the Financial Times how they completely correlate all the data that I have been showing you over the last few months. Okay, are you ready for this? Investors banked profits and adopted a more passive approach after stocks returned to record territory, but U.S. corporations continue to buy back shares at a brisk pace. That's according to Bank of America. We've seen that data before. I've always shown you it. Analysts of Bank of America said clients were net sellers of single stocks for a second consecutive week as hedge funds and institutional and private clients sold the highs. We see this consistently. This is the way it works. You take profits. If you are an intelligent investor, when times are getting tough, you could see that come in. What do? You take some profits. You don't sell all your shares. You sell some of them because you want to be able to take that, put it somewhere safe, and it makes sense. That's what they do. They don't necessarily just keep adding to positions. That's not what the experienced do. Meanwhile, corporate stock repurchases led buying activities right there in the market. Buybacks were at the highest level since early February last week and are up 20% since the start of the year. It added that growth in buybacks has recently slowed, and they tend to rise during earnings season and peak in May. What we had seen throughout April apparently wasn't really the case as we had expected it to be. They were going to reduce the amount of buybacks during the supposed blackout period. It didn't happen. I want to get the data for exactly how much throughout this, but it's a record amount in 2019, so we're not looking at as if they slowed down at all. Imagine this. During a blackout period, they figured out a way to get it done. I mean, the blackout doesn't necessarily mean every single company, and the fact that they cannot buy any shares is really a term that's used, but I'm going to get the numbers definitely, and I will make a video, so stay tuned for that. This is the chart that corresponds to that data. Corporate clients buybacks, you can see how this has progressed over the years. Obviously, it has become the most popular thing to do is to have excessive amount of buybacks. This right now is just showing you the idea that this is what we have to do. This is what we do. We print excessive amounts of money. They are doing so with the central banks. This has become the name of the game. This is what they've been utilizing in order to keep the stock market propped up. And underlying all of that has been this corporations basically getting out there and doing what they can. Okay, so this is really happening at the same time where we've seen all the positivity coming through, and we shouldn't be necessarily so gung-ho about the economy when actually for several weeks in a row, several months in a row, depending on which indicator you're looking at, it actually has not been doing well in the least. We're looking at the PMI numbers coming out that were terrible. everything that really has been showing this for this consistent trend. I did a video just recently and I was talking about the truck orders and so on. That was just like literally this one little piece of that video, yet there were 20-30 comments were talking about how it's wrong for this reason, wrong for that reason. Everyone is always so narrow-minded, looking at the one little piece of data that comes out and says, oh well, that no, you're a liar. This is I actually had somebody that completely, well, I don't know if they did, but they said they're going to unsubscribe from me because I lied to everybody about an article that I read. And I don't know what exactly the lie is, but I just show you the charts, I show you the data, I give you the sources in the description, you do what you want with it. It's getting very strange out there. This is the data, do what you want with it. If you want to invest, please do so. Just be cautious, hedge your bets, look at what's happening right now. Things can change in an instant, that's all I'm saying. Now this here, the reason I mention it is because people are looking at companies, they look at PE ratios, they look at 200-day moving averages, they look at if Warren Buffett bought it, that's their due diligence. Well, here you go. Soaring bankruptcies in Farm Belt force banks to boost defenses. You have to understand what's happening here is that when you have people that are too far in debt, they start to default. These defaults have an impact on the corporations that are involved. You could have the same problem with CDOs, all these derivative products. What about all the credit default swaps that we've seen before? Anybody that's buying up any of these derivatives is going to be impacted. Anywhere you're going to have defaults and bankruptcies, these companies are going to be impacted. And then the stocks of these companies will be affected. If the stocks are affected, you have layoffs. If there are layoffs, you have people who are worsening economy situation. They're not buying this, they're not buying that, they're not going to movies, they're not going to restaurants. You know the deal. That's it. Keep an eye out for this. Any of these companies here that are going to be impacted directly by what's happening with the excessive debt, don't stray away. Remember that debt is crucial to pay attention to, not just the national debt, but of course on every single level. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, when you give me a like, you are supporting this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need, top to bottom, A to Z. This is what you need, and it's in the description. Check it out. If you want the audiobook, it's available at themoneygps.com. If you haven't seen it already, this video is going crazy right now, talking about the fact that there are over 6,000 plus stores that are shutting down, as well as the fact that there is 4.2 million unsold cars sitting on lots in the United States. If you haven't watched it, click on it and I will see you there.